Hey YouTube family, it's Dinko the Realtor, your Utah Realtor. Builders are feeling the Utah housing market slowdown big time. They are getting very desperate. Check out this article by KUTV. Utah home builders offer new incentives to lure buyers. Now if we scroll down here, it shows that Utah's housing market gets squeezed by higher mortgage rates. There are at least one area where buyers could find some surprising deals, and that's new construction, which has slowed way down in a changing market. It's offering buyers a chance to get incentives and perks that just a few months ago were unheard of. Now, this was unheard of a few months ago when we saw that small uptick. However, we saw it last year where they were just willing to do anything and everything to get a buyer to buy a house. And I was saying the data is mimicking that. It's showing that's going to happen again. If you want to buy in 2023 and you can wait until the end of the year, that's when you're going to get your best deal. And it seems like I was right here again, just like I was right last year when I was saying that we were going to see that slowdown. Now, when we go over here, Ross Ford, he's an executive vice president at the Utah Home Builders Association. Let me make sure I'm not blocking anything. Said builders are cutting prices, paying down interest rates to keep them lower for buyers, or even offering complimentary upgrades. And again, we went over this last year. Now we're going over it again this year. This is kind of skewing what homes are actually selling for. And this is what I mean. Let me scroll down right here. Let me just make sure I don't block anything when I get down there. All right, here we go. Say a home buyer comes in and wants a basement finished. Ford said they'll do that for free or at a greatly reduced price. And I am definitely seeing a whole lot of advertisements, a whole lot of incentives of free finished basements because it doesn't show that the house sold for less. So a buyer goes out today, buys a house, and let's say they buy it for $20,000 less than the next door neighbor. Well, the next door neighbor didn't get that free finished basement, so really they bought it anywhere for $80,000 to $100,000 less than that neighbor. It's a way to skew these things, and when appraisers come, if the market picks back up a little, it's just to kind of skew things, right? So I mean, they say that loans are not what they were in 08, 09. Well, it seems like we're always finding loopholes, and I'll get to that here in a little bit later in the video as well. And right here, it's a way for builders stuck with excess inventory to lure buyers desperate for a deal. As mortgage rates remain high, it's also a far cry from the days of some of the builders threatening to cancel contracts with buyers as housing prices soared. So remember, in 2021, home builders would just cut the line, whoever was next, and call the person behind them. So they'd be under contract with a buyer for 6 months, 9 months, and 30 days out from that house being completed, they called the buyers behind them and have them bid them up to $100,000, $200,000 more, and then they cancel the contract if that buyer that's under contract didn't want to match. Crazy times. So home builders better not get bailed out, right, with our taxpayer money. Our world changed on us overnight when interest rates changed, said Ford. Everybody's now trying to go, well, what do we do to make that work? Pretty interesting how things change, right? So this is showing you that new construction is definitely not in a good spot. It shows you that the housing market hasn't fully stabilized. And I've been saying that the best time to buy in 2023 was going to be at the end of the year, just like it was last year. And now the recession hasn't fully unraveled. I'm going to get to that later on here in the video as well. And check this out. This is what somebody who lives in Lehigh, where there's a whole lot of new construction going on the west side of Lehigh, on the west side of the interstate. It's big, she said, adding that there is constant construction going on. I got so much dust in my house, I need a dust buster. So don't let anybody tell you that there is not a whole lot of new construction going on. And if you watched the previous videos, showed you that Utah is always at the top, and really we're in the #1 per capita state with the most new construction. Now let's go to another article that was published 2 days later. Utah builders offer free mortgage payments, but why not just cut the price? Well, that is a good question. And if you cut the price, well, if you keep cutting the price, then it's really hard to get the appraisers and appraisals to match if the market picks back up like it did in the spring of this year, right? We went 15% down from May of 2022 to January of 2023. Then we saw about a 6 or 7% uptick, and now home prices are falling back down. So that's why appraisals, and that's why builders wanting to incentivize free upgrades, to do anything possible to keep those prices overinflated. Now, again, why not just cut the prices and you're offering free mortgage payments? Again, that is a loophole that resembles 08, 09. I mean, you're incentivizing somebody to buy a house, and you're maybe saying, hey, your first payment isn't going to be due until, 30 days or 45 days, because depending on where you close in the month, mortgages are always 30 days behind, and you have 6 months of us making payments. Oh, and don't worry about it. You can just refinance. Well, if you don't have any equity in the house, you're not going to be able to refinance. So that's skewing loans. And who would buy these loans? Well, we're going to get to that at the end of the video here, just like I was stating. So right here, actually, let me just click this. I've already dissected this article. So more builders are offering new incentives to keep buyers on the hook in a tough housing market. How about free mortgage payments? That's what one builder is doing. That's pretty crazy, right? Right now, we are offering, if you buy a house, no payment for 6 months. We're paying the mortgage, said Joe Garlington, Chief Operating Officer, Sandy-based Golden Crest Homes. You can buy a house, move in before Christmas, and not worry about your payment until summer of next year. I mean, if that's not throwing up red flags, if that's saying that, the loans are not resembling 0809 at all, we have much better underwriting guidelines. I mean, we have temporary buy downs, we have free payments for 6 months, we have builders buying down rates all the way to 4 or 5%. And again, they're not dropping the price, and somebody could be stuck in that house because they might not be able to refinance unless there is a government, subsidy that's being passed out there that's going to allow those refinances with a bunch of negative equity. Again, that's if we see a major recession, which we potentially could see, and I'll cover that at the end of the video. And of course, like I've been saying, if you want to buy in a short run, and I've been saying this for quite some time here in 2023, at the end of the year is going to be your best time. So these next 4 to 6 weeks, you can definitely take advantage because there's not a lot of buyers in the housing market. You don't have a lot of competition, so you definitely can get a much better deal right now. Now, if you want to see how the recession unravels, well, that could be an additional 6 months to a year. And we know that the economy definitely hasn't stabilized. So let's go down here. Goldcrest Homes, one of many builders trying to keep buyers coming at the time of high mortgage rates. And the company is also offering, so they're doing, I guess they're offering to buy their house, existing house. I mean, why would you do that? Why would you buy an existing house, right, if you didn't have to? Just shows you how desperate these builders are. Now, right here, let me go to this next section that I cut out. So Ross Ford, again, he's the Utah Home Builder Association. He's their executive or VP or something. We covered that as well. But if you're looking for anything they can do, so builders are looking for anything that they can do to keep the market healthy, but still get their customer in. And by healthy, not cutting prices and getting people to pay these overvalued prices that we established during the pandemic. So that's what builders are trying to do. Why not just cut the price rather than offer various incentives? Ford admits builders could do that, but he said it's not that simple. Of course it's not that simple because you want as much money as possible, right? You want to keep these prices inflated and I don't blame them. I mean, if we owned a building company and, we had employees to take care of and we had costs that were going up because of the pandemic and they were making record-breaking costs, but let's be honest, most people are going to ride that wave for as long as they can, and they're not going to really budget for that. I guarantee you that there are builders that did not budget for this the way that they should have, and if we do see a major recession, they probably could be going out of business. Now, right here, Garlington agrees, noting that only buyers who keep the loan for a full 30 years would see a bigger savings through a price cut. That's actually not true because the only time you actually, with a lower interest rate, is if you actually keep the house, the mortgage, for a full 30 years. That's when you see the savings from that interest rate. If you are going to be selling a house within 4 to 5 years, you're not going to see the savings from that lower interest rate because when you turn around and sell it, you're underwater. So it might help you a little bit on your monthly payment, but that's some BS news right there. Anyways, enough of that. Let's go see what's going on in the secondary market, right? Who would buy these loans right now? What investors would buy these loans? Because the Fed said that they're getting out, they're selling their mortgage-backed securities, and they're no longer going to be buying mortgage-backed securities on the secondary market. Well, if we take a look at this, it's foreign governments, which makes sense, but pension funds. This is something that I was looking for. Retirement funds, right? Pension funds, because our national debt just keeps skyrocketing. Somebody needs to finance that debt. That debt is financed internally in the US and externally in, let's say, China and other countries. Now, insurance companies also go in and buy these mortgage-backed securities because they want to, flip this. They want to earn the money that they have. They want to, get more money on their investment. And you can always sell these mortgage-backed securities in that secondary market, right? Now, check this out what happened in the year 2000. So it's highlighted. August 24 of 2000. So the government proposes letting pension funds buy securities. So until the year 2000, that was not even a reality. Then they were proposing of letting pensions buy it, and now that is actually a reality. As we see here, pensions are, in the secondary housing market where they're buying these loans. Now let me just make sure that I have everything. Okay, cool. Now, if we go over here, this is the debt. I went over this in a previous video. Look at this debt, right? Just skyrocketing when we went away from the gold standard right here in 1970. After World War II, we see that we needed we needed to stimulate the economy because of World War II. And then we were flat forever, for decades, right? And then we went away from the gold standard. Just look at this in the 80s and 90s, and then look at it in the 2000s, right? Well, we needed somebody to finance this debt. This is where we were at in the year 2000. So we needed somebody to finance this debt because look at it just skyrocketing. That's how we got into 08, 09 because of this overprinting of money. And the way we got out of 08, 09 was by printing more money, by stimulating the economy even more. And then that's what we did during the pandemics, stimulate the economy even more. So again, if you want to buy in the short term, right now, would be your best time because there's not a lot of buyers and everybody is desperate. We could potentially see a small uptick in the springtime again if the recession doesn't hit yet, right? And the recession could definitely hit here at the beginning of the year, but you could be waiting an additional 6 months or a year, depending how this recession unravels and what really happens. And are they going to just print more money into the economy? And is this recession just going to be delayed forever and ever, right? That's the call that you're going to have to make. This is why I personally don't think that the housing market has stabilized. We have commercial real estate that nobody is denying is going to be hit just as hard as it was in 08, 09. We have car loans and car dealers that are resembling the subprime mortgages of 08, 09 with the car loans that we're seeing right now. So that's not stabilized. And now, right here, we see that Moody's sends a warning to America. Your last AAA credit rating is at risk, right? We got downgraded a couple of months ago, and now it seems like we're going to get downgraded again because of the amount of money that we're printing. So that's not saying that everything has stabilized. And then we went over all of this, in previous videos, but check this out. Nearly 95% of all tech startup companies worth more than $1 billion aren't able to generate a profit at all. Now, if they weren't able to generate a profit with favorable interest rates, how are they going to be able to, generate a profit with unfavorable interest rates? And how many of these tech startup companies have been through a recession? Well, not a lot, because the majority of these tech startup companies started after 08, 09. So as we can see, things have definitely not stabilized in the economy, in the Utah housing market. Again, take advantage right now. If you're in that short-term buying mode, right now is a good time. Taking advantage of what's going on in these next 4 to 6 months, way less demand, way less buyers. So you as a buyer, you have much more on your side to take advantage and get a much better deal. And if you're wanting to see how things are going to unravel, it could be 6 months, it could be a year. Make sure that you watch the next videos. That way you're up to date on the Utah housing market and the US economy.